Once large-scale PV employees wrap their head around CfDs, what's next? What will the DECC consultations offer? Is the rooftop sector a viable replacement for large-scale investment? And how will the backstop PPA actually work?
It's not just a question now of making CfDs work, of course that's essential, but it's also a question of what's the budget allocation. That's what people struggling at the moment to think, well, how am I going to restructure my business? What they need to know is, what is that market going forward? DECC have not given us any indication of the budget allocation potentially between the RO and the CfD.
More solar going into there through the CfD route rather than the RO route will have a knock-on effect for technologies in that pot as a whole, especially in the early years, which we're working with government to try and come up with some proposals which will alleviate some of those problems for some of the potential issues which solar could face.
The very, very big one that everybody needs to know now is how much money will be available. We know the mechanics of the CfD in a fairly detailed manner. We know the contract, we have seen the drafts, but quite frankly, to make your preparations, that is relatively irrelevant, because no matter how much money there is, you will always have to compete for that money. So the only way to be certain that you can, and the only way that you can prepare yourself now, is to talk with your complete supply chain and make sure you get your costs down.
We've put in 3 consultation responses specifically on CfDs since the start of this year. The first one was on the auctioning switch. And we made very clear that for SMEs, when you're up against potentially big utilities, when you're up against onshore wind, which is clearly much more cost effective, that's going to present a real problem.
It is lip service on the FITS consultation. There is one thing that is being consulted on. There isn't really an opportunity to talk about the non-financial barriers or to talk about relocating commercial roofs at any point in time within their 25-year period. Those are going to be the drivers to open up and expand on the rooftop sector. So it does feel like the FITS consultation is just lip service to make it seem like something has gone on. But it would be better to have no consultation and wait for a period of time to figure out exactly what needs to be done. So this is where it's really immensely frustrating. It's taken this long, 4 months of debate around the large scale and must be almost a year on the commercial rooftop and all the barriers, and it hasn't been listened to, and therefore it's a very frustrating time.
The second consultation response was on the off-taker of last resort, which is this route to market issue. Again, you're disadvantaged if you're a utility, you just can sell the power to yourself. If you're a solar SME, you have to find someone who can offer you a long-term contract. Or what we want under this OLR proposal is to actually free up the short-term PPA markets, and there'll be more competition. But unfortunately, again, what DECC has come forward with was based on the previous administered CfDs. So there are concerns that the discount rate that they're proposing is really too much. So there are concerns about the off-taker of last resort. And then the third consultation response was about the actual allocation methodology itself. And again, SMEs are disadvantaged here because potentially you're looking at some serious penalties if you don't hit milestones, some qualifying criteria which are very onerous for SMEs.
Following concerns raised by ourselves and the industry, DECC have proposed something called the off-taker of last resort, the OLR, which is a backstop PPA mechanism, which is partly designed to address some of these concerns and the broader concerns around the liquidity of the PPA market once the RO closes to new entrants. And indeed at the present time, which is seen as very illiquid, and there are a few drivers in place to incentivise a large supplier to offer a PPA to a smaller generator, for example, at the moment.
The backstop PPA will be given, I guess, within the next month or so, and that will give investors confidence in what they can offer in a debt financing. You will always be able to receive your strike price minus the fixed discount. In all the consultations which came out so far, it is believed that the discount should be £25. That means that that as a developer, you should be able to go to any debt provider and explain to them, I might not know exactly what my strike price is today, But when I know what my strike price is, I know that I can pay any money back, which is £25 less than what the strike price is over the complete production that I have in the next 15 years. That basically means that whereas today in the market you would need a fixed price and a floor price afterwards to make these kind of statements to a bank, you do no longer need those. And therefore that means that our costs are going to be lower for a developer, and that means that he should be more competitive.
It's a £25 discount to the prevailing spot price, if you like, of power. So there's a few things arising from that, one of which is if you're pricing your bid in the auction process, then it gives your competitors something of an idea of what your pricing level may be if you're seeking the backstop PPA. Whereas other people who are going through another financing route don't have that, you're not aware of that.
The problem is the level at which that backstop PPA will be set and whether investors will have confidence that that is going to provide sufficient assurance, comfort, that this is a strategy that's going to work.
We have seen in other markets that that these systems are workable. We have also seen in other markets that that solar is even able to beat the administrative strike price of onshore wind. We can also expect that there will be enough companies who will be able to handle this. However, I would urge the developers to not ignore the CfD and only focus on the RO for the next 9 months, because DECC has also stated in their consultation, if there's going to be a major boom of RO-built assets, they could take further measures as well.
What we need is, if we're going to put a lot of time and energy, we really need commitment from DECC that they are going to commit to giving the second cheapest, most popular renewable in the UK a much bigger, metered share of the resource than they seem to think is appropriate at the moment.